Good day, fellow investors. Today we're going to talk about three idiots that are all within us, but that cost us a lot of money. The goal of this video is to discuss the irrationalities that bring your investing focus on the wrong things. Those things are skin in the game of others, short-term fluctuations in the market, and outperforming the market. And there's also something that is related to me. I can speak and make you happy by telling you what you want to hear, or I can say what I think, and that also leads to dealing with trolls, idiots, and that's something funny that we'll implement in this behavioral finance mindset investment video. So I've recently made some changes as I see life and investing especially as a long time evolving process, and people don't like changes. So I've taken a break for investing because I was influenced, and other four reasons, especially tax reasons, so some people get it. Thank you for those comments. Then I also launched a YouTube portfolio where we follow 30 stocks. The goal is at least to learn about business, because investing is about business, about the risk and reward and how that business fits you. But it seems lately that whatever I do, I get many negative comments. Don't really care about the negative comments, but those comments also show the key psychological mindset fallacies that we as investors have, and therefore this is extremely important to discuss, to see if you fall into that group, or at least partially. We all do, so of course we are all idiots, and if you comment something against this in the comment section, it means that you didn't watch till here, where I say that we are all idiots. Don't worry. Nevertheless, so many comments on this, and let's discuss. For example, with the YouTube portfolio, just recently made an update on a few companies, how it goes, what is the plan, how we are learning, and then Faust with his name and surname, hello paper Sven, or paper portfolios are a waste of time, no skin in the game, the demo account. So many comments about that. Then on the other investment issue, short-term price changes. I don't think this was a negative comment by Luis. He is long-term subscriber to the channel, but still, prices of everything, of course, the market is going down, so those are going down, but this is extremely important because this is so tempting to focus on, but loses you a lot of money in the long term. And then, of course, the question is, can it outperform the market? Because everything is about performing compared to others instead of focusing on how you can be better at what you do. And that is a fallacy that's so hard to comprehend. So the focus should be on not what others do, but how it fits you. Of course, on your returns, not how those returns are compared to the market. That's a fallacy. And of course, don't focus on short term, accept the volatility. That's a given. Focus on the fundamentals. Now, another note here. I come from here, which is the Mediterranean, which means I am a bit hot-tempered, and I received many suggestions on how to answer comments, how to behave. From a business person, very kindly, he said, Sven, you always have to be polite with these comments. Everyone can be in the client, you have your reputation, you have this and that, and you have to take the time, never react or comment impulsively, be very, very polite. And then I was thinking, but that's not me. So if you snowflakes feel insulted by this video, then unsubscribe, hasta la vista, goodbye, smash that dislike button, and we'll never have to talk again. So if you're still here, let's talk direct. Let's be blunt, and let's not have a friendship here. Let's just be facts, value, risk and reward, how it fits your money, how it fits my money. And that's the only relationship when it comes to money that's healthy for the long term. So here are the three idiotic things that I see over the comments constantly, and it's very important that we address that. First is skin in the game. It is a paper portfolio. It is, in the last few days, 50 comments like this. So to be blunt, or to joke in the line of this video, you're an idiot if you think that what I do or what some other YouTuber or something that they do, or even an investment manager or Palipatia or something like that, if you think that their skin in the game has to have any impact on your risk and reward assessments. That's completely the wrong way to look at things. Because investing is about your money and how the risk and reward fit you. And how might the investments bring to your financial goals. This is the YouTube investment portfolio that we started to follow 30 businesses over time, to learn about business, because investing is about business, so that you can learn and see how and when it fits you. And I'm sure that over the next decade, you will find a few risk and reward situations that perfectly fit your investment goals, and that's the goals. And maybe even I, from following 30 here, 50 on my research platform and constantly doing research, maybe I'll find a few that fit my requirements, because we are all different. Everybody is different. We have different family situations, inheritances, this or that. No one is equal, which means that no investment can be seen with the same eyes from anyone, ever. Everything is different. You have to learn how to find things that fit you. That's extremely important. And on the other hand, when it comes to skin in the game, we have done Margin of Safety Chapter 2, Wall Street. We are after your money. Fees, this or that, management fees. That's how Wall Street makes money. So be sure to take from me what gives value to you, but don't go beyond when it starts to be detrimental, because we are all different. And especially don't be an idiot and think that on social media there is skin in the game. Unfortunately, I've learned that also, as being a finfluencer, as they say, my skin in the game cannot be represented here on social media, cannot be a factor, cannot be anything. Of course, I learned, it's a process, and now I share it happily with you. So be very careful on that point. As I said, we can't have the same risk and reward situation. And the core to know is that's your money. It's not my money, it is your money. You have to own it, take responsibility for it, and whatever happens with that money, you did it, not somebody else. And then you'll start thinking also in a different way about your money. Of course, this doesn't mean that I will not share what I do. On my research platform, I will always share whatever I do with my investment money. That's a given. I will just not care about how it might impact you, your portfolio, your life. I will explain the risk and reward, try to do it in the best way possible. Of course, show what I do if you want to know it, because everybody wants to know it, but you must know that you have to understand the risk and reward yourself. But I'll try to eliminate all the hold my hand types of situations when it comes to promotions, etc. Because this was again a comment that someone lost 37% in the last periods, and that's the risk and reward problem. To emphasize here, many can't handle the volatility in the markets, then they blame the one that got their idea. But the fact is, I'm down too, and I know that the long-term investing process, it can be down for 5 years. That's a part of it, especially of the strategy implemented. Don't focus on what others do, focus on how it fits you. The next idiotic mindset is short-term fluctuations. So easy to get attracted. It feeds those perceptors, makes you feel good, makes you feel smart. News, everything is about the short term. You also always have these stock prices going up or down, but it's totally irrelevant. Now, as I said, I don't consider Lewis Hill as a troll or a negative comment. This was just a comment that explains the situation. Of course, the market is going down, but since when do 2-month results matter? However, there are many trolls then. We discuss a lot of stocks here, and those go up and down. But whenever there is a stock that goes down, there are hundreds of comments on every stock that it goes down. It is incredible. Sven, this, oh yes, this aged like milk or something like that, and constantly pounding on that one stock. I don't know why that short-term focus attracts people so much. I've spoken that, I've made a video about my mistakes, we discussed that. The key is to understand the volatility, accept it, and understand that over the long term it should be a positive sum game from owning businesses. The short-term perspective is a very dangerous mindset. And number 3 is perhaps the most complicated and hardest to understand, and here I am also one of the biggest idiots, and that is outperforming the market. Everything in life is compared. When you go to school, you're compared to the top of the class, to this, to that, to other colleges. It's insane. And everything on Wall Street is performance, performance, relative performance, relative performance. You have to focus on absolute performance. And if you can get that, then you will be a great investor over your life cycle. And the sad thing is that performance is the only sales card in investing, and let's discuss that and compare it to the market performance. This is the market where I invested. I started in 2002, so let's say here, and the market has 2x over the 20 years that I have been investing. 2x. Then if we look at the index, I started here. So what is this? 4x investing. 2x and 4x. And if I would have been just investing in the market, I would still be a poor kid from a former communist country. And that would be the case if I invested in index funds. Fortunately, I didn't do that. But what I want to discuss, and I will make more videos about this extremely important topic, it is about your risk, your rewards, your financial goals, not about what the market will do. You have to understand the risk and reward of the market and how it fits you. If it doesn't fit you and the market doubles in the next 10 years, it's simply the risk and reward didn't fit you. It doesn't matter. If it fits you and the market drops 50% in the next 10 years, then you are again happy because you know what can happen to the market and that fitted you at that moment in time, which is the core of investing. Of course, we try to not chase the market, but do the best we can over the long term, but comparing ourselves constantly to the market is extremely detrimental. And I did that too. I'm an idiot there too, so I made a lot of mistakes trying to chase something instead of just focusing on doing the best you can, finding the best investments, irrelevant of the market, and in relation to your long-term investment goals. And then, of course, there is no undervalued or overvalued, but it is the easiest thing to discuss to look smart. Undervalued focuses on your greed, overvalued on your fear, and therefore you have to be very careful not to let these two guys, these two idiots, impact your long-term investment. You have to do what's best for you, irrelevant of the market, and this is hard, and that's why we are all idiots here. And I'll continue to be an idiot, we'll continue to make mistakes, but we'll try to minimize those, and if we manage to eliminate these three factors, the three idiots from impacting us, we'll do even better over the long term. And by better, I mean not outperforming the market. I mean that each one of us reaches his or her financial goals. Thanks for watching, and I'll see you in the next video.